Social Security taxes, the truth behind the hype. Despite the widespread belief that taxes on Social Security benefits have been abolished, the reality is quite different. To clarify, there is no provision in the recent tax legislation that renders Social Security benefits tax-free. In fact, the taxation of these benefits at the federal level began back in 1984 as a measure to bolster the Social Security Trust Fund, which was then on the brink of insolvency. Furthermore, a complex array of rules concerning age and income means that not all retirees will be eligible for the newly introduced senior bonus deduction. The misleading narrative surrounding Social Security and tax reductions for seniors, particularly in the context of the so-called One Big Beautiful Bill, is likely to lead to confusion and frustration at tax preparation offices in the upcoming year. Many retirees, unaware of the actual tax implications, may find themselves bewildered when they file their 2025 tax returns, asking, "What do you mean I still have to pay taxes on my Social Security benefits?" In July, I came across social media posts from tax professionals expressing their dread about having to break the news to clients. Adam Markowitz, an enrolled agent from Florida, voiced his frustration on X, stating, "Yes, your Social Security is still 85% taxable. I know that's what Trump keeps saying, but look at what he signed, not just what he claims." The confusion among retirees regarding taxes on their benefits was exacerbated when the White House reiterated on July 4 that there would be no tax on Social Security after President Donald Trump signed the legislation. However, this statement is misleading. Following this, the Social Security Administration sent out an enthusiastic email to millions of beneficiaries, which only added to the confusion. Some retirees expressed disbelief that a federal agency would promote such claims, which seemed to misrepresent the actual benefits of the new law. The email from the Social Security Administration claimed that nearly 90% of beneficiaries would no longer owe federal income taxes on their benefits, suggesting significant relief for seniors who have contributed to the economy throughout their lives. But is this figure accurate? More on that later. The email also implied that retirees would receive two separate tax breaks, stating, "The new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples. Additionally, it provides an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can keep more of what they have earned." However, the term "additionally" was misleading, as there is no separate provision that eliminates taxes on Social Security benefits. In fact, the law only introduces an enhanced deduction for taxpayers aged 65 and older, which does not guarantee that some retirees won't still owe taxes on their Social Security benefits. The Social Security blog later issued a correction without clarifying the original error, leading to further confusion. So, how does the new senior bonus deduction work? This temporary deduction, which can be as much as $6,000, applies to taxpayers aged 65 and older for the years 2025 through 2028. After which it will expire unless Congress takes action. Tax professionals refer to this as a special personal exemption designed to lower tax liabilities for many seniors. However, it's important to note that higher income seniors may not qualify, and those with lower incomes who do not owe taxes will not benefit from this deduction either. Mark Luscombe, a principal analyst for Wolters Kluwer Tax and Accounting, pointed out that because this is a deduction rather than a refundable credit, it won't assist seniors who already do not owe income taxes. Additionally, the deduction begins to phase out for higher income seniors, starting at a modified adjusted gross income of $75,000 for single filers and $150,000 for married couples filing jointly. Interestingly, you don't even need to be receiving Social Security benefits to qualify for this deduction. However, if you are between the ages of 62 and 64 at the end of the tax year, you will not be eligible for the senior bonus deduction, even if you are collecting benefits and meet certain income thresholds. Here are some key points to keep in mind when preparing your 2025 tax return. Married couples where both partners are 65 or older can each claim up to $6,000, potentially totaling $12,000 for the couple. Couples must file jointly to claim the senior deduction. Those filing separately will not qualify. A valid Social Security number is required to claim the deduction. The deduction phases out entirely for single taxpayers aged 65 and older with a modified adjusted gross income of $175,000, and for married taxpayers at $250,000. The phase-out occurs at a rate of 6% for income exceeding these thresholds. For instance, consider a 70-year-old retiree who is single and has a modified adjusted gross income of $90,000. In this case, $15,000 exceeds the $75,000 threshold for single filers. By multiplying that excess amount by 6%, we find a reduction of $900 from the maximum $6,000 senior bonus deduction, resulting in a final deduction of $5,100. It's crucial to understand that taxes on Social Security benefits have not been eliminated. Insisting otherwise may mislead your friends and family, as many individuals still need to withhold taxes on their Social Security benefits if they have other significant income sources. Neither the House nor Senate versions of the bill included any provision to abolish taxes on Social Security or provide a deduction for Social Security income, as confirmed by a summary from Wolters Kluwer. While Trump proposed making Social Security income tax-free during his 2024 campaign, such a change could not be included in the budget reconciliation process due to restrictions in the Congressional Budget Act of 1974. Garrett Watson, Director of Policy Analysis at the Nonpartisan Tax Foundation, noted that while the new deduction attempts to align with the spirit of the president's campaign promise, it is misleading to market it as a complete exemption from income tax on Social Security benefits. This could confuse or frustrate seniors who end up paying taxes on some of their benefits. The senior bonus deduction applies to any taxable income a taxpayer aged 65 or older may have, and it does not necessarily eliminate all taxes on Social Security benefits. Since the taxation of Social Security benefits began in 1984, the new tax break may provide some savings for many seniors over the next 4 years. However, as Howard Gleckman from the Urban Brookings Tax Policy Center pointed out, most seniors will see a reduction in their tax liability on Social Security benefits rather than a complete elimination. The most significant beneficiaries of this deduction are likely to be seniors earning between $80,000 and $130,000, who could see an average tax cut of about $1,100, which is roughly 1% of their after-tax income. However, estimates suggest that fewer than half of older adults will benefit from this deduction. The amount a qualifying senior can save on taxes will depend on their taxable income, which determines their marginal tax rate. For example, at a 12% marginal tax rate, a $6,000 deduction for a single taxpayer aged 65 or older would yield $720 in tax savings. The complexities surrounding this issue can be overwhelming. How can Trump assert that there will be no taxes on Social Security benefits? It seems that retirees will need to navigate this situation carefully, paying close attention to the fine print. Luscombe remarked that the president often tries to present a positive spin on issues, which may not always align with the facts. The 90% figure cited by the Social Security Administration appears to echo a number used by the White House, but it is misleading. Prior to the new tax law, about 40% of Social Security recipients were already paying taxes on their benefits, with some estimates suggesting that this figure is closer to 50%. The Tax Foundation did not provide an estimate of how many seniors would be exempt from taxes on their benefits under the new deduction, but it noted that roughly half of all Social Security beneficiaries did not pay federal income tax on their benefits before the new law was enacted. Gleckman pointed out that the 90% figure used by the Social Security Administration is not reflective of reality, as it seems to assume that all tax deductions, including the new senior deduction, are solely used to offset taxes on Social Security benefits. However, older adults also pay taxes on all their taxable income, not just from Social Security. The Social Security system is notoriously complex, and this complexity can be daunting for older adults who rely on these benefits for their living expenses. The recent communications from the Social Security Administration have not alleviated this confusion. In fact, they may have made it worse. Understanding how Social Security benefits are taxed will continue to be a significant challenge for many individuals aged 62 and older. According to Social Security data, nearly 23% of men and 24.5% of women who claimed retirement benefits in 2022 were aged 62. While the earliest age to claim Social Security retirement benefits is 62, doing so results in a reduced monthly benefit, as the amount is decreased for each month taken before reaching full retirement age, which is currently 67 for those born in 1960 or later. Unfortunately, it doesn't take much additional income to trigger taxes on Social Security benefits, as the income thresholds that activate these taxes do not adjust for inflation. For single filers, taxes on up to 50% of Social Security benefits apply when combined income is between $25,000 and $34,000. If combined income exceeds this range, up to 85% of benefits may be taxable. For couples filing jointly, the thresholds are $32,000 to $44,000 for the same tax implications. Combined income is calculated as your adjusted gross income, plus any non-taxable interest, such as interest from certain bonds, plus half of your Social Security benefits received that year. Therefore, Individuals who are working while collecting Social Security must consider their job earnings, as do retirees taking taxable withdrawals from traditional. Ask the editor, understanding the $6,000 senior deduction in 2025. **** Feeling confused about taxes in retirement? You're not alone. **** Navigating the ever-changing tax landscape can be a real headache, especially for seniors. This week, we are diving into some frequently asked questions about a new tax break designed specifically for those aged 65 and over, the $6,000 senior deduction. Let's get started. Our guide comes straight from Joy Taylor, the editor of the Kiplinger Tax Letter, who tackles reader questions head-on. Want to stay ahead of the curve? You can grab a free issue or subscribe to the Kiplinger Tax Letter here, https://subscribe.kiplinger.com/loc/ktp/kipcomsdirect. Question 1. Will the One Big Beautiful Bill make Social Security tax-free? Here's a common misconception: I'm retired and get Social Security. I heard the new bill eliminates taxes on my benefits. Is that true? Joy Taylor's answer: unfortunately, no. The so-called One Big Beautiful Bill, OBBB, you might have heard about it here, https://www.kiplinger.com/taxes/Trump-pushes-for/bill-with-focus-on-tax-cuts, doesn't make Social Security benefits completely tax-free. Currently, many Social Security recipients pay federal income tax on up to 85% of their benefits, depending on their income. While President Trump did promise to eliminate this tax, the way Republican lawmakers passed the OBBB, using a process that bypassed the Senate's 60-vote rule, didn't allow for this change. Instead, lawmakers found another way to offer tax relief to seniors. And that relief comes in the form of a new senior tax deduction. This deduction allows taxpayers aged 65 and older to deduct $6,000 from their taxable income. For married couples, where both spouses are 65 or older, that deduction doubles to $12,000 on a joint return. This deduction is available whether you take the standard deduction or itemized deductions on Schedule A of Form 1040 or 1040 SR. Important note: this deduction is temporary, starting with the 2025 tax returns, filed next year, and ending after 2028. Want to become a smarter investor? Subscribe to Kiplinger's Personal Finance and save up to 74% a year. https://subscribe.kiplinger.com/servlet/orders gateway $CDS_mag_code $CDS_page_ID=CDS_page_ID=2682337%CDS_response_key I3ZPZ001. Stay informed with Kiplinger's free e-newsletters. Get expert advice on investing, taxes, retirement, and personal finance delivered straight to your inbox. But here's where it gets controversial. Not everyone qualifies for this deduction. It begins to phase out if your modified adjusted gross income, MAGI, exceeds certain limits, $150,000 for joint filers and $75,000 for single and head of household filers. The deduction disappears completely once your MAGI reaches $175,000, single head of household, or $250,000, joint filers. Also, each eligible spouse must have a Social Security number to claim the deduction. Question 2, can I claim the senior deduction if I itemize? I always itemize deductions on Schedule A. Can I still take the $6,000 senior deduction? Joy Taylor's response: yes. The deduction is available to both those who take the standard deduction and those who itemize on Schedule A. The IRS will likely add a new line on the 2025 Form 1040 after the stand.